Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go over gold and silver, do a technical analysis. In the beginning, I'm going to go over margin debt and how it is not expanding. And sometimes that happens before a potential crash. So, or at least a pullback, maybe not a crash, but a pullback. And I'm not talking gold and silver, I'm talking about the overall market. So I'm going to show you what I'm looking at. I'll show you the charts and what I'm seeing. Again, I am a neutral person. I just look at the charts, I draw whatever it is, and then the outcome is what the outcome is. And I do own gold and silver. I am a physical holder of it, and I do have mining, shares, mining shares. So let's jump in, and I'll tell you what I think gold and silver looks like. Now, first, I'm going to start with the FINRA margin debt and the S&P 500. The red line is the margin debt. The blue line is the S&P 500. And the correlation that we can tell here and what we can see is that margin debt starts to contract before the market responds. And what we're seeing here, 6/1/2021, is that the margin debt is coming back. And what potentially could happen is we could see this manifest itself in the S&P 500 pulling back. So I'm watching this. I think it's another indicator, looking at margin debt and what margin debt is doing. If the margin debt is going to pull back substantially here, we could see a market pullback with it. So that's one thing to look at. This is margin data through July 2021. Looking at the 10-year U.S. Treasury, it is diving down. We're getting this sell-off here. It popped higher, hit the top of its trend line, and it's pulling back again. This sometimes indicate that we could have a pullback here. It could be a strong one. And I'm looking at gold. Gold's got these big sell-offs all sprinkled out through in here. And then we've got these up days that are smaller than these two big, large sell-offs. If we see this start to roll over, and remember, this is a high, a lower high, a lower high. If this thing can't break 1838 or 1840-ish, somewhere in that range, if we don't break and we start rolling over, I'd be careful. I think we could go down here. Now, this is silver. We already broke out of its channel or its pattern to the downside with some good volume. Here's the volume. Here's the big move lower. I got to see this pull back up. If this doesn't pull back up, if we come up and contract below this line here, and it looks like we're going to dive, we could see a dive lower. Platinum, you draw the chart kind of through here. It kind of coiled up right through here. It broke to the downside, higher lows all coming up. We could see some lower pullback here, somewhere in here. Now, I'm not selling anything, but I'm just waiting. I'm waiting for a bottom to add money into. I'm being very slow with my movements. GDX, we're coming down. We've got a big bearish engulfing here, sold off. This could potentially go lower here. Same with SILJ. Big bearish engulfing, lots of momentum coming down. I don't see the buyers just flinging this thing back higher. I'm seeing lower highs come down, and then another bearish engulfing here where we could go lower. I'm starting to see this kind of roll over here, and the 50 days coming down. It's not looking good. Franco-Nevada's still holding strong, so that's a positive there. And Wheaton Precious Metals is holding strong as well. Hecla Mining broke its uptrend, so we are in a little bit of a pullback for Hecla Mining. And EXK, another silver company, came up into this kind of wedge pattern, and it broke to the downside. And we could see potential, a nice good pullback here. Consolidation pullback. Now, I'm not really doing much of anything. I'm not buying. I'm not selling. I'm just sitting here watching this stuff. I know that it's cheap. But cheap does not mean that it has to go higher in the short term. It can become cheaper. What I'm doing is I'm watching this, and we could go down here, not just gold, but just the entire market. Let's continue to watch it. Let's see what the margin debt's doing. Let's see what the 10-year's doing, and let's see what copper's doing. I didn't show copper here. You know what? I'll pull it up real quick just to do a quick, get some eyes on it. So here's copper. Copper doesn't look too bad. It's just kind of going sideways. We have to see if this trend, if we can hold on copper. And if we see copper dive, copper looks fine. But if copper really dives here and we see the 10-year dive with it, something bad's coming. That's my opinion. Something bad's coming. But copper doesn't look too bad. Just by looking at that chart, it looks like we're still moving. But if we start breaking below, I'd say $4.20 or something like that, $4.20, and it really breaks, like you get a big wave of selling, and it just shoots lower. We may have a crash coming in front of us. Because if margin debt contracts, if we see the S&P 500 roll over, which we kind of are, if we see the NASDAQ composite roll over, we're starting to see some of these pull back. We're starting to see a lot of commodities pull back. Everything's pulling back. If we see the 10-year and 10-year go down, dollar go up, and the copper signal just tank, where the gold to copper ratio especially, if that thing tanks, then I think we've got problems. And people are running to safety. I'll continue to monitor that. Subscribe to the channel if you guys are interested in that. I'll do a separate clip, maybe not right behind it, but I'll continue to monitor it. Maybe I'll put it in front of some of these in the front of some of these gold and silver updates, and keep you guys updated. Give me a thumbs up for the video, and thanks for watching. This is Finding Value.